US economic growth slows in Q4 amid policy uncertainty and harsh weather condition. The United States economy experienced a noticeable deceleration in growth during the fourth quarter of 2024, as confirmed by the latest data from the Bureau of Economic Analysis on Thursday. While the economy had demonstrated robust expansion in the preceding quarter, signs of cooling momentum surfaced, exacerbated by adverse weather conditions and growing concern over the economic impact of recently imposed tariffs. According to the BEA's second estimate, the gross domestic product expanded at an annualized rate of 2.3% in the final quarter of 2024, marking a decline from the 3.1% growth recorded in the July-September period. This revision aligned with market expectation as economists polled by Reuters had anticipated minimal adjustment from the prior estimate. While modest upgrades in government spending, the exports contributed to the final figure. Downward revision in consumer spending and private investment partly counteracted these gains. Despite the slight slowdown, consumer spending, an essential driver of economic activity, maintained a 4.2% growth rate, reaffirming resilience in household consumption. Newly imposed tariffs introduced during President Donald Trump's initial month in office have created uncertainty in both consumer and business sentiment. As tariffs function as an indirect tax, the prospect of higher prices on imported goods has generated apprehension regarding potential inflationary pressures. The situation is further complicating the Federal Reserve's ability to maneuver its monetary policy effectively. The Trump administration's aggressive push to reduce federal expenditures and shrink government operations has resulted in unprecedented layoffs of federal workers. Additionally, federal contractors have suffered setbacks due to budget reduction impacting economic activity and dampening overall spending, the primary engine of the US economy. Inflationary trends remain a focal point for policymakers. The core personal consumption expenditure price index, which excludes volatile food and energy prices, registered an upwardly revised 2.7% increase in the fourth quarter, surpassing the previously reported 2.5% growth rate. This metric is closely monitored by the Federal Reserve as it serves as a key gauge in its 2% inflation target framework. While the US economy remained on a solid growth path, the trajectory for the first quarter of 2025 appears increasingly uncertain. The combined effects of weather disruptions, trade policy shifts, and fiscal austerity measures pose potential risk to consumer confidence and overall demand.